How to reduce the tax payable on an AIP. Now, the AIP is the accumulated income payment that you receive if your child or the beneficiary of an RESP does not go to college and you're getting the payment. So if you remember from the last video, an AIP is subject to be taxed at your own marginal tax rate plus 20% penalty tax. So it can be quite hefty. So how do you reduce that tax payable? Well, here's how. If the AIP recipient or their spouse has RRSP contribution room, and I apologize for my voice, I do have a cold, but we'll get through this. It may be possible to reduce or eliminate the tax on an AIP by making an offsetting RRSP contribution. The AIP recipient must be either the RESP subscriber, like the parent usually or grandparent, or the spouse of the original subscriber who is deceased. If the AIP recipient is eligible and they have available RRSP contribution room, they can contribute the amount of the AIP, which is up to a maximum of $50,000, to an RRSP or spousal RRSP during the year in which the AIP is received, or within the first 60 days of the next year. Then the AIP recipient can claim an RRSP deduction for the year in which they received the AIP payment, reducing or eliminating the tax applied to an AIP. If the AIP recipient contributes an amount equal to the AIP to an RRSP, they will pay no taxes on the AIP. So that's the key. You have to transfer it to an RRSP. If you have contribution room, if you are the subscriber and you don't have contribution room, then hopefully your spouse has space. But yeah, RRSP is the way to go. So here's an example. So Fred received a $10,000 AIP withdrawal from his RESP account. He has $15,000 in unused RRSP contribution room. So by transferring the AIP withdrawal to his RRSP, Fred will reduce his taxable income by $10,000. The transfer will not be taxed because he has enough RRSP contribution room available. All right, so RRSP is the way to go. If you're getting an AIP, hopefully you can transfer it or you will pay heavily on taxes.